Open Stock is one of the most active stocks for Wednesday, the 8th of October 2025, down 4.2%. Over 130 million shares have crossed the tape. It is always, and including today, drawing the attention of investors, traders, and indeed, the open army. So there's a lot of chatter going on right now, and something has happened of late. So let's just find out what it is.
Shares of Opendoor Technologies Inc. are drawing increased attention after Roundhill Investments announced the launch of a new meme stock ETF. According to the company's fact sheet, the fund is being positioned as the only ETF in the world to offer targeted exposure to meme stocks. Among its largest initial holdings are Opendoor, PLUG, Plug Power Inc., and QS, QuantumScape Corporation. This development has sparked renewed trading volume and community chatter around Open, as its inclusion signals strong retail sentiment and positioning within the speculative, momentum driven segment of the market. Meme stock ETFs often attract active retail traders who seek to ride short term price swings rather than purely fundamentals, which can amplify volatility both upward and downward. For Open Doors specifically, being a top component in this ETF could increase passive inflows from ETF investors, potentially boosting liquidity and price action, elevate visibility among retail traders and momentum funds that follow meme or social sentiment baskets, heighten volatility as meme stock focused funds tend to react quickly to sentiment shifts. Market observers are also noting that Open Door has historically shown sharp price reactions during periods of heightened retail activity. Its presence in the ETF may align it more closely with other high beta, high attention names, creating potential for both speculative rallies and rapid pullbacks. In short, this ETF launch is seen by some traders as a short term catalyst for Open due to increased exposure and inflows, but it also underscores the riskier, sentiment driven profile the stock may carry going forward.
Okay, what we can see here is that aggressive traders and swing traders and indeed investors are here. However, the passive ones are here as well. The market for the stock is liquid, really liquid, really liquid. Because everybody's here, and the volumes are so high, and we still have up to 2.5 hours before the close of today's trading session. So extrapolation is saying nothing to the upside. Is more of a contraction that is being extrapolated. And the stock has been relying on of late, the 21-day moving average as a primary supply line. So by that I mean each time it closes within one standard deviation of that moving average, that's the 21-day moving average. The next day it bounces. You can see that this happened on Monday the 22nd, and on Tuesday the 23rd it bounced. That's also the case on 30th, and it bounced on October the 1st. Yeah, we can clearly see that on Friday the 3rd of October it closed within that, and then on Monday the 6th it bounced as well. So tomorrow the 9th of October, we are likely to see a bounce, even though the extrapolation is not saying that. So all the data here, we have been able to bring it to Claude to give us some digestion of them all. So the market grid not seen on this chart is it gives us a trading range. The stock has a capability of trading within, especially in the interim. So these are the probabilities. Okay. Yeah, those are the probabilities of the stock printing some of those prices. Then we have the price pressure momentums. These measure the angle of attacks of the various moving averages. So ppm one, this one here, ppm one measures the angle of attack of the 10-day moving average. This one here, ppm two, measures the angle of attack of the 21-day moving average. The other ones, ppm three, ppm 200, they are not on the screen. This one measures the angle of attack of the 40-day moving average. This one, the angle of attack of the 200-day moving average. And the 200-day moving average underscores the underlying trend. So the all of them are trending. All of them are trending strong trend modes. Any price pressure momentum value above 0.25 is regarded as trend value. Any from 0.25 is regarded as trend. So we can see the 10-day moving average has 0.7349 is trending. However, its first derivative is bearish, fractionally bearish, indicating that some deceleration is going on. I mean, obviously the stock is down 3.5%. Yeah, so selling pressure is affecting positions opened up to 10 days ago. Exactly, positions opened exactly 10 days ago are still in profit. But the ones opened much later on may not be in profit. That's what this is trying to indicate. Okay, so whereas the ones opened 21 days ago, very much in profit, nothing has happened to them. Everything is positive, nothing negative. However, the divergence, the bullish stance of the ppm two, the 21-day moving average is giving us a divergence relative to that of the 10-day moving average. Okay, so all the other ones, everything else is trending positively. So all of this, in summary, the suggestion is that there's a short-term pullback into an intermediate uptrend. Yeah. So this is a trade setup. This is for 1 to 3 weeks. This is not a recommendation that you should apply. If you applied, there's a risk that you will lose money. So it is recommended that you do, if you're doing so, it is at your own risk. Okay, it's not a recommendation that you do so. Okay, so the strategy is a mean reversion long. So first entry will be 8.09 to 8.37. Secondary will be 8.5 to 8.69. The rationale is that the price pressure, the extrapolation is that lower prices may remain in place up till 8.0, sorry, up till the 23rd of October. Okay. So if it does that, then these opportunities may arise. Okay. Especially this one, the primary one, it may arise. Okay. So, okay, confluence of 8.03 and 7.61. It's a downward projection. Yeah. Okay. There's this is the market grid has 8.09. Yeah, it has the value is 8.09, and there's also a Fibonacci downward projection of 7.6. So we remember we're talking about rationale. We're talking about we're finding the grounds to justify this trading strategy. Okay, and yeah, so bear in mind it's also a strategy set up for up to 1 to 3 weeks. So given the fact that the market grid has the lowest values at 8.09, and there's also a Fibonacci projection at 7.61. So, and then also we have the 21-day and the 40-day moving average all trending, suggesting that since they are trending, a dip in the stock towards such levels, 8.09, 7 points, or yeah, 8.09 or thereabout, justifies a deep buying opportunity. So targets will be 9.01, 70% probability, 99.21 to 9.57, 55% probability. Okay. 9.89, 30% probability extended target. Stop loss if it gets to 7.85, yeah, below the buffer, which is the buffer is 8.09. Horizon, okay, we have an extrapolation that says time horizon of October 2023 to November 7th exit window. Okay, so long term setup 2 to 4 months. Okay, yeah. So this is what we have here. Target zones will be entry will be the dimension entry. You can see the entries here. Um, okay, yeah. So the stock is currently at 8.94. So it pulled back to, yeah, around 8.5 or thereabout. Yeah. So at current levels, so that's what it's suggesting. It seems to be suggesting current levels is providing an opportunity for up to 2 to 4 months. Okay, so a breakout entry will be above 10.21 volume confirmation. So yeah, if it does break at above 10.21, it also provides an opportunity, yes, with volume confirmation only. So target zones 10.49, 13 to $14. Yeah, and their probability for 10.49 is 55%. The probability for 13 to $14 is 40%. 16 to 0.8 is 25% probability. Stop loss is 7.6, which is Fibonacci projection it has. So key catalyst to monitor. Price pressure momentum one, the angle of attacks, first derivative turning positive confirms momentum shift. Break and hold above 8.71 on daily closes. Okay. Volume expansion above $10 plus levels. So yeah. So this means if volumes expand even beyond more than average, but above average at $10 plus levels, then this can be those are catalysts to monitor. So summary of probabilities: near term decline 8.09 to 8.37 probability, bounce to 9 to 9.5 by early November, 65% probability, break above 10.21 within 3 months or 5%, reach 16.08 within 6 months. Okay, key risks. Watch the price pressure momentum on the 10-day moving average closely. If first derivative remains negative beyond late October, it could signal a deeper correction towards 7.6, despite stronger angle of attacks on the 21 and 40-day moving averages. So just have a look and drop a comment, and we'll have a look at what you're saying, what you think. This is not a trade setup. It's more of a swing slash, yeah, more of a swing setup, So one more time, it's not a recommendation that you apply it. If you apply it, there's a good chance you may run out. We may run into losses. So thank you very much for watching this video.